Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 17, 2022. Let's take a look at stocks with a heavy insider and institutional buying. So when insiders and institutions buy stocks, that means it's at a turning point, especially when the stock is down and trying to go higher. So with that, let's jump in and look at few stocks. So the stocks we'll look at today, they got volume more than 1 million shares, and they got heavy insider buying, and some of them have got heavy institutional buying. So we'll take a look at this list and go from there. So look, from a stock news perspective, after a nice rally, the futures are pointing downwards. As you see here, Dow Jones Industrial Average futures down about 111 points, S&P 500 futures also down, and Nasdaq futures down. This is typically the case because market went so quickly, both Monday and Tuesday, and even Wednesday. That tells you after the news there will be a sell-off. That's what's going on here. We have the Fed news here. They're going to be increasing the rates. As you can see here, they approved a 0.25% rate hike here. This is the first rate hike since 2018, and there will be aggressive path ahead here. We got six more rate hikes coming up, as you can see here. So with that, it's really from this point onwards, it's a turbulent market again. Fed is out with their positioning here. They're going to be aggressive. And then we got here, there is a sharply raised outlook for inflation. So that's why you got to be careful here. And futures promptly dropped here more than 100 points in case of Dow Jones Industrial Average. Keep this in mind. There will be turbulence going forward. We got still geopolitical tensions, and there are various inflation related pressure on the market. So that's why market is going to be turbulent. It's a good traders market. So that's why, and also for the long term investors, as good stocks come down, it's our opportunity to buy them and go from there. So all right, let's now look at stocks with a heavy insider buying. So I got here all the stocks you can see here. They got price more than $10. So these are a little more stabler stocks for long-term investors. I will talk about stocks with less than $10 separately, for the speculators. But this list primarily is for the investors who want to invest a little bit for the longer haul. And then we got here insider as well as institutional transactions here. Look, this list has got it's sorted by insiders buying. Top of the list you got heavy insider buying, and also I made sure institutions are not selling, so that way there is a heavy insider buying and institutions either keeping quiet or buying slowly, as you can see here. So that's always a good sign. You don't want insiders to buy when the institutions are selling. It will neutralize, or the other way around. That's why I want to make sure when the insiders are buying, institutions are not selling. So that way there is a good starting point for us, and we can invest. And as you see here, I got here both sales, which is a revenue number, as well as sales growth. I like the companies with the nice sales growth. And then you got gross margin and net margin. Few companies are net margin positive. Those are the stronger candidates in this type of market. As you see here, we got few companies with nice net margin positive. We'll talk about that. And then you got debt to equity, which is long-term debt to equity ratio. And we got shorter term quick ratio. So I like the companies with the shorter term quick ratio above 1 and longer term debt to equity ratio below 1. So we look at some of those names. And then importantly, RSI or relative strength index. I want relative strength index to be less than 45 when I'm buying these heavy insider buying type stocks here. As an example, probably right now I would not jump in and buy JHG here. RSI 56 also tells me there is a rally that's going on right now. Instead, I would focus on a little bit lower RSI candidates. As an example, U here, it's got a little bit lower RSI. I would look at such names here, but I would look at other fundamentals also. And then we got short ratio here. Heavy short ratio indicates there could be a short squeeze type situation going on here. So that could give you some idea, especially when you see here red in the short ratio. That tells these are heavy shorted stocks here. Some of them already went up nicely, as you can see here. That's a nice short squeeze, as you can see here. And then you got performance all the way to 1 day to 5 year. We can see how it's doing. Typically, I like the stocks with a longer term, say 1 year or 5 year. If there's a nice performance in 1 year, 5 year, that tells you longer term they're good, but short term they're struggling. As an example, we got one here, SLF. It's got, at least 5 year, it's got a nice performance of 82%. And now it's trying to go higher, as you can see here. So that tells you it may be okay, but in this case, RSI is higher for Sun Life. I would wait for a little bit cool off here. And then finally, we got free cash flow here. I love the companies with the free cash flow positive. That tells you these companies are generating money. As an example, we got a few here. We got Six Flag, as you can see here, free cash flow positive. I could make a case for a company like Six Flag here, with the folks really going out of late because Omicron and COVID-19 fears are a little bit subsiding. People can't put their life on hold for very long. That's why I can make a case for Six Flags to go higher as we go forward. This has got a short ratio of 6%, and near term it's going higher. Free cash flow positive, something you can look at and see if you can put some money, for a recovery type play here. And then got a few more with the free cash flow positive. As you can see here, we could look at such names. And finally, I always look at Altman Z-score. I like the ones with the Altman Z-score more than 2, or especially more than 1.8. We got some names here with the nice Altman Z-score. And finally, we got the industry benchmark here, comparing the stock to its respective industry. I like the industry leaders. As an example here, look Insight here, which is one of my favorite stock. It's an industry leader. It's got profitability 1, good compared to industry, and it's got nice growth. It's rank 1 here, and valuation is also 1. So I would go with such names here. Insight is a good one. That it's a good one here. I would wait for a little pullback, given it's gone up RSI 66 here. And I could also make a case for JHG here. Again, RSI is a little higher. I would wait for a little pullback here, but overall, as you can see here, it's growing nicely compared to industry. Right now, RSI is a little bit higher for me. As you look through here, we got a few more here with a little bit better, better performance here compared to industry. I would look at such names and buy them slowly. And look, we got IVZ here. This one also is doing pretty okay compared to industry here, but they're a little bit low on Altman Z score. I would rather go with a little bit higher Altman Z score here. And then finally, as usual, keep look on the RSI here. I want the ones with a little bit lower RSI. I'm looking to buy such names slowly and go from there. Look, we got one here, CTBK here. It's got very low RSI, 39, as you can see here. It's doing pretty okay compared to industry here from a profitability perspective and a valuation perspective. And this one is trying to go higher slowly. You could take a look at such companies. For a swing trading type opportunity, given this has not done great in the past from a performance perspective. And we got a few more here. I love Gitlab. Gitlab is a great company. A lot of the software developers love this company. Right now, as you can see here, Gitlab is going up in the near term. If this comes down a little bit, I would be a buyer. Even at this level with the RSI 40, you could buy some Gitlab. I can see this company doing very well in the future. And we got a few more here. We got Uber. Uber also, as you can see here, it's trying to go higher in the near term. This can do very well. They got an able leader at the top here. I think this can do also very well. We got a few more here. Even Bandwidth is a good company. Look, stock has been clobbered off late here, and it's doing pretty okay compared to industry. High short ratio for bandwidth also. You could buy this one also. This can also do very well. And I love PRGO here. It's a great biotech type company here. Stock is clobbered, as you can see here. It's also doing pretty well compared to industry. I would be a buyer of PRGO also here. And we got a few more. Look, AYX, Altorisk, it's a big data company. Both insiders and institutions are buying here. Stock is clobbered big time. Look, 1 year 30% down, as you can see here. And you could make a case for this one also, given it's beaten down at these levels here. I could see a bounce back here. And we got Stitch Fix somewhere here, right here. You could buy this one also. It's completely clobbered and beaten down at these levels here. Very high short ratio, 18%. Stock is trying to improve in the near term. This can also have a nice short squeeze type situation here. You could look at that one also. And I love Warby Parker. It's an eyeglass company, as many of you know here. This can also do well. Look, insiders are buying heavily for Warby Parker here, and institutions are also buying, and stock is responding, by going higher. Even up here, RSI is 46 tells you this can go higher. Very high short ratio, as you can see here. All right, so with that, we got a few more here. I will not cover all of these in detail, but I want to point out two things, two stocks here. One is ABR, other one is BHC. Look, we got ABR here with the, in this one here, we got insiders not doing anything here, 0%, as you can see here, but insiders, institutions are buying heavily. So I love especially BHC here. It's a nice company, and look, stock is going higher in the shorter term here. It's also doing well compared to the industry. I would be a buyer of BHC at these levels here and go from there. All right, so next is, we got few names here. I know few of you want to trade a stock with a price less than $10. This is for those folks, but this is not for any longer term investors. This is for swing traders and speculators especially. So if you see here, this is the list here. I will not go through them in detail. But as usual, look at a little bit better companies here. As you can see here, we got sales growth here and gross margin and net margin. If you want to focus on a little bit stronger candidates, I urge you to look at companies with a little bit better margins. For example, Coty here, companies making money, net margin positive. And this one is going higher in the shorter term. You could look at such names here. RSI is 54. That tells you it's right now it's over, slightly getting into overbought level here. I would rather look at stocks with a little bit lesser RSI here. As an example, we got one more here, BHG. This one is sold off, as you can see here. RSI is 39. That tells you stock is sold off here. It's trying to go higher. You could look at such names here. Stock is sold off with a lower RSI, trying to make an improvement in 1 day, 5 day, 10 day. That's where you got to look at and make some progress there. We got one more here, which is a penny stock, as you can see here. It's also trying to make some progress in the near term. If you're a speculator, you could look at such names where RSI is low. That tells you it's beaten down. There is some nice insider institution buying, and stock is trying to make a progress in the near term. And we got a few more with the low RSI here. Look, we got one more right here, which is a read. Got low RSI, and stock is trying to go higher in the near term. That tells you there is a bounce back, especially driven by these insiders and institution buying. You got to be careful. This is for not long-term buyer. Given it again, it's a penny stock, as you can see here. And that's how I would approach here. And as you can see here, I got one more page. It's a continuation. I would apply same methodology here. And look, you can also look at longer term 5 year and see if any of these are doing well in the 5 year. As example, we got Mankind here, $3 stock, as you can see here. This one had done nicely in 5 years. That tells you longer term it's doing pretty okay. But shorter term, look, it got clobbered here and trying to go higher in the shorter term. You could look at such names here. RSI is 50, middle of the road. And we got a few more along those lines here. You could look at such names. Look, we got one more here, Workhorse. Workhorse also, it's doing pretty okay in 5 years. Longer term is, it's not great, but it's okay. But look, it's trying to go high in the shorter term. You could look at such names here, but RSI 54, that tells you, it's a little higher for me at this point. I would rather look at lower RSI stocks. Like you got one more here, Evolve. It's a low RSI stock. Is right now it's getting clobbered, as you can see here. But if this bounces a little bit higher, then I would be willing to put some money here purely for speculation, but not for long-term play here. So with that, thank you very much. Happy investing and trading. Please subscribe.